Morning, everyone. It's 10 o'clock. I think we'll start. And thanks for joining us. This is a webinar for the eJoburg Retirement Fund on the two-pot system and, importantly, how to draw a two-pot withdrawal benefit if you'd like one. We very kindly have Kathleen, who's on screen, and Tubby Singh joining us, who will be signing it. So please bear with us. If we have complicated words that aren't standard, we may just need to repeat them and then we'll edit them out because this webinar will be put up on the website. In terms of process, we'll spend about 40 minutes on the first item on the agenda, as you can see it on screen, which is to explain the two-pot system. And then we'll take a 20-minute question and answer session, so you can ask questions. Your mics have all been muted, but you can post questions in your Q&A section if you want to. And then obviously, when we have the Q&A section, you can raise a hand. Andy, who works with me here, will open your mic, and then you can ask your question. The second section then, for about another 40 minutes, will be the important part of how to make a savings pot withdrawal, the importance of making sure your data is correct with the fund, and then just a reminder of what communication is out there if you need further communication. Sorry, just my keyboard is not working, so I'm going to use a mouse to change. This workshop only applies if you're a member of the eJoburg Retirement Fund, which does apply for almost all the employees of the City of Joburg and the municipal entities. But some people may belong to some of the older funds like the CJPF and the MEPF. If you are members of those funds, you're welcome to stay and listen, but some of the issues may be different for your fund, e.g. in terms of the processes they follow, and you should approach your own fund for that type of information, but you're welcome to stay if you would like to. Right, important issues behind two-pot. Sorry. All your benefits up to the 31st of August are unchanged and are protected. So you didn't need to worry that you're going to lose anything or your rights would change on the 1st of September. And there was no need to resign. There were people worried that they needed to resign because they would lose things. All of that is protected, and we'll explain that in more detail as we go through. The two-pot restrictions and changes only apply to your contributions after the 1st of September. So again, it doesn't apply to anything that was before the 1st of September. What's also important is that your data that's held by the fund, your personal data like your date of birth, your name, your ID number, must be correct so that we can make sure that if money is drawn, it's paid to you. What we're very worried about is somebody pretending to be you and trying to steal your money. So we need to make very sure that it's you that comes forward and asks for a benefit. And we'll spend quite a lot of time on that later in the presentation. So let's look at a high-level summary of the two-pot system. It started on the 1st of September. It's in place and it's working as we speak. And the important part that most members understand is that they can now take a savings pot withdrawal without having to leave employment, and they can take that in cash. How much is it? And this is really what's been called seeding capital, and everybody's aware of a number of 30,000, but in fact that seeding capital is the amount moved into your savings pot on the 1st of September, which is 10% of your money in the fund, your fund credit, on the 31st of August, but subject to a maximum of 30,000 Rand. So if you, for instance, have 500,000 Rand in the fund on the 31st of August, 10% will be 50,000, but it's subject to a maximum of 30,000. So your amount will be 30,000. If, on the other hand, you had 150,000, 10% would be 15,000, and your initial amount would be 15,000. So it really depends how much you had in the fund as to what that initial value will be, and it is not 30,000 Rand for everybody because it depended on your benefit at the 31st of August. And that is what will go in as your opening amount in your savings pot. From the 1st of September, a third of your contributions each month will go into your savings pot as well. So if your contributions were, say, 6,000 Rand a month for September, a third of 6,000 Rand is 2,000 Rand. 2,000 Rand will go into your savings pot in September, and another 2,000 Rand in October, and another 2,000 Rand in November, and so on for every month. Obviously, when your salary changes, then your contribution changes along with that. So that will go in every month. To be clear, the 30,000 happened once, and that wasn't 30,000, it was 10% or 30,000, whichever was the lower. Happened on the 1st of September, and then this third of contributions each month after 1 September. You now have a savings pot, but you can only take that money if there's more than 2,000 Rand in your savings pot. If you have less than 2,000 Rand, you can't take it, but obviously it'll continue to grow with those contributions and investment return. And when it gets to be more than 2,000 Rand, then you'll be able to take it. That amount is taxed, unfortunately, and we can't escape tax, but whatever you take will be taxed as income. By taxed as income, it's really as though it's added to your salary and taxed as part of your salary. And we'll spend more time on the tax. And an administration fee will also be deducted because there's quite a lot of work for the administrator to actually have to process this payment. You can only take one amount in a tax year. The tax year runs from the 1st of March to the end of February the following year. So you can only take one withdrawal from your savings pot in that 12-month period. As an example, you come forward in April 2025 and you take your savings pot amount, fine, you get paid out. In October 2025, you have an emergency, you need money, but you won't be able to take another withdrawal because you've already taken one in that tax year, because you took it in April 2025. The next time you will be able to take money will be in March 2026, because that's the start of the next tax year. So please be careful that only take the money if you need it, because if you take it and use it, you won't be able to withdraw in that same tax year if you need it later in the tax year. That's your savings pot. As we said, the balance of your benefits, which is the amount in excess of the seeding capital, retains all its existing rights, preserved rights, existing rights. And that is to be taken in cash on resignation. And again, we'll cover that in more detail. We've seen what happened to a third of your contributions after 1 September. What happens to the rest? The other 2/3 will go into your retirement pot, and that amount must be preserved to retirement. So this is a very important change. At the moment, if you resign, you can take all your money in the fund. From the 1st of September, your retirement pot cannot be taken in cash. It must be preserved. And by preserved, we mean kept in the retirement system until you reach retirement. So you could keep it in the fund, you could transfer it to a new fund, and we'll cover those options. But the important part is you can't take that in cash. Now, it's been called the two-pot system, and government are probably trying to confuse us because, in fact, we need 4 pots. So what are those 4 pots? The first one we'll call pot 1, or the vested lump sum pot. And that is money that you've got in the fund on the 31st of August, where you have the right to take that money in cash on retirement. It doesn't apply to many people, probably only 20 to 30 people in the fund. And we've got 33,000 people in the fund. Now, those people are either members that transferred from a particular fund, being the Soweto City Council Fund, pension fund, and moved their money to eJoburg, or members that have previously transferred money from a provident fund, a fund which had the right to take all your money in cash on retirement. And as I say, that only applies to a very small group of people, and we won't spend a lot of time on that. For most people, their money at 31st of August will go into pot 2, or let's call it the vested annuity pot, which is just about all of their money in the fund, their fund credit, less the seeding capital, which has gone into their savings pot. So that's where your existing money will be from the 1st of September. The third pot is the savings pot. And we've seen from the previous slides that into that savings pot will go your seeding capital, the 10%, maximum of 30,000, and a third of your contributions after 1 September 2024. And finally, we have pot 4, or the retirement pot, into which 2/3 of your retirement contributions after 1 September will go. So for most people, they will only have the 2nd, 3rd, and 4th pots. They won't have the first pot, so we'll concentrate on those last 3 pots. If you do happen to have pot 1, the seeding capital is taken pro rata from the pot 1 and pot 2, the vested lump sum pot and the vested annuity pot. Importantly, at the moment, you've got a fund credit in the fund. Let's say it's 200,000 Rand. If the fund earns 10% returns, investment return, then 10% of 200,000, you would get 20,000 Rand of investment return. Your fund credit will become 220,000. Going forward, you've now got these other pots, but each pot will get the same investment return. So if you've got 100,000 in one pot and 50,000 in 2 other pots, you've got 200,000 in total. Each of those 3 pots will earn 10%. You will get the same 20,000 Rand of investment return. So this doesn't affect or prejudice you in terms of the investment return that you will earn. And it doesn't really matter where your money is because it will earn the same investment return. Let's look at resignation. So up to the 31st of August, all your money was in the fund, your fund credit, and all your contributions went into your fund credit. If you resigned, it could all be paid in cash. You didn't have to take cash, but if you wanted to, you could take it in cash. That money will all just be moved across to your vested annuity pot. On the 1st of September, there won't be any further contributions, but you can still take that full amount in cash when you resign. So you can see you haven't lost the rights to take money in cash when you resign, in respect of your money that you had up to the 31st of August. That money will grow with investment return as well. But from 1 September, you will now have a new pot called your savings pot, into which will go your seeding capital and your third of contributions going forward. If you haven't withdrawn that, when you resign, you can take it in cash. We then open another pot for you called your retirement pot on the 1st of September going forward. Into that will go 2/3 of your retirement contributions. But if you resign, you cannot take it in cash. Doesn't matter how small it is, doesn't matter why you resigned. Even if you're retrenched, you can't take it in cash. It must be preserved in the system. You really will have 4 options of what to do with that retirement pot. You could leave it in the eJoburg fund if you think the trustees will look after it for you and get you good returns, and then it'll be there for when you retire. If you change jobs and you join a new employer and they've got a retirement fund, you could transfer it to the retirement fund of your new employer, which is quite a good idea because then all your money is in one place being looked after. Or you can move it to 2 types of preservation. The first is called a retirement annuity fund, which you would choose, or what's called a preservation fund, again, which you can choose, but commissions might be payable when you do that transfer. But it is your choice. You could leave the money in eJoburg, and if you say resign but you don't have a job, leave it in eJoburg. You get a job in 6 months' time and join that new employer, you can then come back to eJoburg and say, transfer my money then to my new employer's fund. Even if you transferred it to your new employer and you resign from your new employer, you can't touch it then because it has to be saved to retirement. So no matter where it is, you can't get it before retirement, which in South Africa is age 55. So you could potentially retire from any age after age 55 and then take your money as a benefit. But we'll see what happens on retirement. So let's look what happens on retirement. Up to the 31st of August, all your money was in your fund credit. If you retired, you could take a maximum of 1/3 in cash, and the balance had to be used to buy an annuity or a pension. From the 1st of September, that same money in your fund credit will go into your vested annuity pot, and when you retire, the same rules apply. Maximum of 1/3 in cash, and the balance used to purchase an annuity or a pension. So you can see your rights in terms of your money up to the 31st of August are completely unchanged. But we've seen our savings pot from the 1st of September. When you retire, if there's any money in your savings pot, you can take it in cash. We've also seen your retirement pot building up from the 1st of September. And when you retire, the full amount in your retirement pot must be used to purchase a pension. It's not 1/3, 2/3. It's the full amount. Now that might seem unfair because why isn't it 1/3, 2/3? But if you look at the green box, it's 1/3, 2/3. And if you look at a combination of the blue and red boxes, it's a combination of 1/3, 2/3. So really there's no change. You can still take 1/3 in cash at retirement if you haven't previously taken as a withdrawal, but they've just split it into different parts. There's currently a rule in terms of the Income Tax Act that says if you've only got a small amount on retirement, then it doesn't make sense to buy a pension and you can take it all in cash. And that amount is 247,500. So if your total benefit up to 31 August was less than that amount, you could say, I'll take it all in cash, and the 1/3, 2/3 rule didn't apply. They've changed that from the 1st of September to say that if all the amount that has to be used to purchase a pension is less than 165,000, then you can take it all in cash. So what had to be used to purchase a pension? It was 2/3 of your vested pot, your green box, and all of your red box. If those two are less than 165,000, then you can take it all in cash if you want to. Okay, great. We're going to switch out interpreters, and then Tabi Singh is going to join us now. So this is fairly complicated and different. It's certainly new for all of us. So what I'd like to do is go through it again, but explain it in a slightly different way. Pots are new. We don't understand pots. We haven't seen them before, but everybody has a bank account. So what I'd like to do is put it in terms of pretending this is in bank accounts. Obviously, the money with the fund is actually invested and earning good investment returns with different investment managers. But let's just pretend it's a bank account. So up to the 31st of August, let's pretend all your fund credit was with Nedbank. You can pick any bank you like, but let's green, so let's pretend it's Nedbank. When you resigned, you could take all of that money in cash. And if you retired, you could take a third in cash, but the balance had to be used to purchase an annuity or a pension. What happens from the 1st of September? All your money in your Nedbank account stays in your Nedbank account. There's no change. And if you resign in the future after 1 September, the same rules apply. You can take it all in cash on resignation. And if you retire, a maximum of a third in cash and the balance to purchase an annuity. But what's happening on the 1st of September is we're opening up a new bank account for you. It's blue, so let's pretend it's Capitec. Now, what are the rules for the Capitec account? They're different to the Nedbank account. You can take that money in your Capitec account at any time. You can withdraw it without leaving employment. If you resign, you can take it all in cash. And if you retire, you can take it all in cash. So you can see those are the rules for your Capitec portion. But also on the 1st of September, we open up a third bank account for you. It's red, so let's call it ABSA. That's your 2/3 of contributions after the 1st of September. The rules for your ABSA money is that if you resign, you can't take it in cash. You have to preserve it to retirement. And when you retire, it's not 1/3, 2/3. Your full amount in your ABSA account has to be used to purchase a pension or an annuity. So it might be easier to understand this in terms of bank accounts, with each bank account having different rules. But what's also really important to understand is the money you've got in that initial, we call it a Nedbank account, keeps the same rules and nothing changes. The new rules only apply to the money in your Capitec and ABSA accounts after the 1st of September. Important issues around the savings pot. It's your money. You're entitled to do what you want with it. But please remember that whatever you take now will reduce what you get later on resignation or retirement. If you take your money now, you will get less later because you've got a lesser amount in your pension fund. It's simply, if you were going to get that money when you resign in 6 months' time or a year or 5 years, you said, I'd rather have it now, and you'll get less when you withdraw or resign. And if you were going to retire shortly, remember, you'll have less when you retire. It may mean that if you take everything you can now in cash, you will get nothing in cash when you resign or you retire. Because remember the rules around the different pots, and your retirement pot has to be preserved. Remember the rules on retirement, that your full retirement pot has to be used to purchase an annuity. So just be aware that whatever you do now will affect what you can do on future resignation or retirement. Also remember what you take will be taxed, and there will be an administration fee deducted from that amount. So you will get less than what you expected. But again, it's your money. And if you need it for a good purpose, for example, you need to pay school fees, then it's obviously a good reason to do it. We'll cover the amount in a moment. What is important is you can only take one amount in a tax year. So remember, if you've drawn something in March, April, May, June, July, whatever it happens to be, you won't be able to take another amount until the following March, because that's the start of the next tax year. There's a slight complication that if you resign and you've already taken a savings pot withdrawal in that tax year, you can't take your savings pot in cash on resignation. And I'll give an example to explain it, unless it's 2,000 Rand. So our member comes forward in April 2025 and takes her savings pot. No problem, she's paid it out. She then resigns in November 2025, and her savings pot is built up again because of the 1/3 of contributions. Because she's resigning, but she took that savings pot in April, she will not be allowed to take her savings pot in November. It will have to be left in the fund or preserved until at least the next tax year. The only slight proviso to that is when she came forward in November, if the savings pot was less than 2,000 Rand, then she could in fact take it. But if it was more than 2,000 Rand, then she can't. Please be aware that all of these requirements are not an issue set by the fund or the trustees of the fund. These are in terms of the law set by the government, in terms of the Income Tax Act. So the fund and the trustees can't change it. You can't come forward in November and say, gee, I know I took money in April, but I'm desperate, I need my money. Unfortunately, the fund can't comply because this is a requirement in terms of the law. Important issues around the retirement pot. You can't take it in cash on a resignation. As we've said, it's either going to be left paid up in the fund, transferred to another approved retirement fund, or either a retirement annuity fund or a preservation fund. There are transfers allowed in terms of the law that you can move money into your retirement pot from your other three pots, your vested lump sum pot, your vested annuity pot, and your savings pot. It's not clear why anybody would do that, because once it's in your retirement pot, those same conditions would apply, that you can't take that money in cash on resignation. But it's allowed if you want to do it. But what is important to know is that you can never transfer money from your retirement pot to your other pots. So you can't say, I need the money, I've got money in my retirement pot, let me put it to my savings pot. Unfortunately, in terms of the law, that is not allowed. Some people have worried that they need to come forward soon after the 1st of September to get their money, or they lose the option. That is not the case. You can take that savings pot whenever you want it. So if you didn't need it now, you don't have to take it. You can take it in January. You can take it in April next year. You can take it in 2027. It will always be there for when you need it. Obviously, remembering that you can only take one withdrawal in a tax year. But the important point is, if you don't need it now, you don't need to take it now. You also don't need to take the full value in your savings pot. If in our example, the member's got 25,000 Rand in her savings pot, but she needs 10,000 Rand for school fees, she doesn't need to take the full 25,000. She could just take what she needs and leave the rest for when she needs it later. But it is important to understand, if the school fees were 10,000 Rand, if she asks for 10,000 Rand, she won't get that full amount, because tax will be deducted and the administration fee will be deducted. So let's say tax of 2,000 Rand is taken off and the fee of 250 Rand is taken off. she will in fact only get 7,750 Rand out. So she would need to ask for more than 10,000 Rand, say 12,500 Rand, to make sure that after tax and fees, she gets the 10,000 Rand that she needs. And just from the trustees, they have asked us to note that the recommendation is don't take the money unless you really need it, because it will reduce your retirement benefits. Very few people in South Africa retire with enough money to survive. And if you take more money now, you'll have less at retirement. So please just think it through carefully before you take a withdrawal. But it is your money. If you do want it and you do need it, you're entitled to take it, and the fund and the trustees won't stop you, but they would just like you to think it through carefully. Great, we've covered the first part of the presentation. We're actually a little bit ahead of schedule, but what we'll do now is Andy will let us know if there's any questions in the question and answer session. But if anybody has a query, please just raise your hand, and then Andy will open up your mic and you can do it. If you need your camera to be opened up as well, you can, if you want to sign a question. And then Ntabi Singh will interpret it for us. I don't think there's any questions as yet, but there are no silly questions. We've held a number of these presentations, and all the questions have been helpful. If you aren't sure of something, then it probably means somebody else is unsure about the same issue. So please, would somebody start the questions and raise their hand if they would like to? Okay, no one as yet, but I'll give you a couple of moments. People do wonder about divorce. What happens on divorce? If you get divorced, then it's the same as before. Your spouse, husband or wife, is entitled to a portion of your benefit. Let's say it was 50% in terms of the divorce order. And before 31 August, your spouse would get half of that benefit. After 1 September, they would still get a half, but they will just get a half of each of the different pots. Pots 1, 2, 3, and 4. So it just works like that. Oh, guys, still no questions. You must all be on top of this. Great. Well, what we'll do is then we'll carry on with the next part. And if you've got questions at the end, even if they relate to the first part, please raise them then. How do you make a savings pot withdrawal? There are two main ways of doing that. The first one we'll call a WhatsApp method, which is via WhatsApp. And the second is what we'll call the member portal method, or you'll go through the fund's member website. Most people so far have used the WhatsApp method, and it's probably the easier one to use, so we'll look at that one first. Essentially, all you need to do to start the process is to WhatsApp a message to the number 071 909 6789. That is a cell phone number administered by the fund's administrator, which is Momentum. The message doesn't have to be high, it can be anything you like, but it just opens that conversation. And what you then start is a conversation with the administrator's computer. You're not sending it to a person, you're sending it to a computer who will automatically respond to you. The first thing that will happen is that you'll get a message asking for your personal information. And that's so it can check that you are the person that you are pretending or you actually are. We don't want somebody coming forward and pretending to be somebody else and trying to fraudulently steal their money. If that data doesn't match, so let's say it's Howard has come forward and said, I've sent the message, it's come back and said, hi, my name's Howard, here's my date of birth and my ID number, and that doesn't match to what the fund has got, then it's probably not Howard that's come forward. And immediately the process will stop because it's probably fraudulent. You will then get referred to a call center and they will try and explain what's gone wrong. So if in fact it is Howard, but it doesn't match for whatever reason, you'll get referred to a call center, you can solve the problem and then restart the process. If it does verify, you'll get a response with various options. And the options could be to tell you the value or benefit, to tell you the amount in your savings pot, or to ask for a savings pot withdrawal. So if you want to know how much is in your savings pot, you could send back whatever the number is, and it will come back and tell you that value. But let's say you want to make a savings pot withdrawal. It will then come back with another message to say, do you want all the money in your savings pot? Do you want a percentage or a proportion of your savings pot? Or do you want a particular rand amount? So in that example we had for earlier, our lady would ask for 12,500 rand because that's what she needed for her school fees. Obviously, you can't ask for more than you've got in your savings pot. If you've got 20,000 in your savings pot, you can't ask for 25,000 because it's limited to what you've got in your pot. You then send the option through that you've chosen, and it will ask you to provide your annual remuneration. And that is so SARS can calculate the tax that will be deducted from the payment. And we'll talk in more detail on the tax just now as well. So you need to then estimate your annual remuneration. Remember, that's annual, not monthly. And send that back, and SARS will use that for the tax. That's it. Your request will then be processed. Tax will be deducted. The 250 Rand administration fee will be deducted, and the balance will be paid into your salary bank account. What we mean by your salary bank account is the bank account where your employer, either the city or an ME, if you work for one of the municipal entities, pays your salary every month. And why is that happening? Is to prevent somebody trying to get your money paid into their bank account. You won't provide that bank account. We'll get it from your employer. So let's say you work at eJoburg Water. eJoburg Water will has already given your bank account details to the administrator. And if you request a savings pot withdrawal, it would pay to that salary bank account. And there are no exceptions. You can't come forward and say, I don't want it into that bank account. I want it into another bank account. That will not be allowed because the risk of somebody trying to steal your money is just too high. And then finally, you'll get an SMS notification saying everything's done, the money's been paid into your bank account. You can then go check it's there and then use it as you need to. So quite a simple process, all automated through the system. So it's very quick, and that's important because literally thousands of people have come forward, and it would be very slow if we did it one by one. Just on the WhatsApp method, that number is active. So you saw the number on the previous screen. It's also available on the websites and in the various communication. It gives you the option to find out your benefit values. And it's quite useful to use and test, even if you don't want to take your money, because you could just check that your details are right on the fund. So you could send that a message to that number, choose how much are my benefits, and if they can verify, then it proves that we've got your details correct. And if you want to make a savings pot withdrawal at any stage, you'll be able to do so. If you do need to get help, the administrator has got a two-pot call center to help you with any queries. That number is a share call number of 0860 22 27 39, which is open weekdays during office hours, and you're welcome to phone that. That only covers two-pot issues. If you've got other fund queries, you can go through the normal call center. Great, we're going to switch back to Kathleen. The other method is to go through the member portal or the member website. The fund's website address is eJoburgretirementfund.co.za on the screen. Once you go in there, that is a website that anyone in the world can see. So there's a lot of information there that's really useful. If you want to know what the disability benefits from the fund are, or if you want to know what the investment returns earned by the fund are, that information is there. If you want to see what the funeral benefits paid if you were to unfortunately die, or your spouse, husband or wife has unfortunately died, or if your child who's under age 22 dies, then those benefit information is there as well. So it's a really useful website with a lot of useful information and not just two-pot information. But because you're looking to do something personally, you need to go into the member section. On the top right-hand corner of the website is a member login button, which you can press to go in. If you haven't previously registered, you will need to use the register button to register as you would on any other website to register. You go onto the website, you log in, and then you will see an option, as before, to take a savings pot withdrawal. You may need to provide various information again to verify it's you. You'll need to select how much you want, all of your savings pot, a portion of the percentage of your savings pot, or a random amount, and send that into that. You'll need to provide your annual remuneration, again for SASL to be able to estimate the tax, and then you've done. Your request will get processed, the tax will be deducted, the fee will be deducted, and the balance will be paid into your salary bank account. Again, no option to pay into another bank account. And you can choose whether you'll either get an SMS or an email notification that the payment has been made once it is done so. So again, a fairly straightforward process. We do recommend, if you haven't done so already, you look at that website and possibly register if you want to, because there is a lot of useful information on the website. Let's look at the tax. So as we said, the tax will be calculated based on your taxable income in the tax year that the withdrawal is processed. So if you were to take a withdrawal in October 2024, it's in the 2025 tax year, which ends on the 28th of February 2025. If you take a withdrawal in April 2026, you'll be taxed in terms of the next tax year. As we said, you need to tell the fund to be able to tell SARS what your annual remuneration is so that they can do that estimate of the tax. Knowing what your annual remuneration is difficult. We all see our pay slips. We know what our take-home pay is, but we don't always know exactly what our income is. But you may be able to get a reasonable estimate from your latest pay slip. Remember also, you don't know what your salary increases will be going forward, potentially overtime if you qualify for a bonus. So all you can do is provide an estimate of your tax. And that's quite important because SARS will then use that estimate and deduct that tax. But at the end of the tax year, SARS will calculate your actual tax, and you may have to pay in more, or you may get money back. So let's say our member withdrew 20,000 Rand. She puts in an income, and SARS says her tax should be 24. Let's make it 24%. They will then take off 24% of 20,000 Rand, which is 4,800 Rand, and that money will be paid across to SARS. If at the end of the year, SARS do the calculation and that tax rate shouldn't have been 24% and should have been, say, 22%, then you have paid 2%, 24 minus 22, too much, and you will get money back from SARS of that 2%. 2% of our 20,000 Rand was 400 Rand. You will get 400 Rand back from SARS at the end of the year. But if the tax should have been, say, 26%, you've paid 24, 2% too little has been taken off. Again, 2% of 20,000 Rand is 400 Rand. You will have to pay another 400 Rand to SARS at the end of the tax year. This is why it's important then to make sure that your estimate is fairly close so that you don't have a big amount to pay in or get back at the end of the tax year. And as you'll see on the screen, any overstatement or underpayment then comes through at the end of the tax year. SARS have been changing the position on this, but if it changes again, we will put up a notice on the fund's website and we will send out a fund newsletter. How much could that tax be? Now, it's important to remember everyone is different and has a different income. So we can't say your tax will be so much because we don't know what your income is. But these are the marginal tax rates for the tax year ending 28 February 2025. So you'll see if you've got an annual taxable income of less than 95,750, the tax rate is 0. And then it depends on your income after that. So for example, your monthly income is 20,000, your annual income will be 240,000, and your marginal rate would be about 26%. If your monthly income was 40,000, be an annual income of 480,000, your tax rate will be around 30%. So you can get a feel for what tax will be taken off initially. If you put in naught as your annual remuneration, SARS currently will probably not take off tax because they'll say no income, no tax. But that doesn't mean you've won. Because remember, at the end of the tax year, SARS will come back and ask for that full amount of tax. So it's not a good idea to put in naught because you'll get more now, but then have to pay more at the end of the tax year. SARS have seen a few people do this, probably unintentionally. So they are looking to change the process going forward that it will use the remuneration you've put in and the tax rate you paid last year and say whichever is higher. So if our person mistakenly put in naught remuneration, they'll say, hang on, he paid 23% last year, they'll tax 23%. And that is a good point because we don't want people to have to pay a lot of tax at the end of the year. Let's just look at the different benefits you can take in cash. So, if you take your savings pot in cash, it will be taxed as income. If you resign, then any amount of your savings pot you take in cash will also be taxed as income. But the other amounts you can take in cash, being your vested annuity pot and your vested lump sum pot, will be taxed in terms of the withdrawal tax scales. So different tax rates apply to the different money on resignation. Remember, your retirement pot has to be preserved, so no tax is payable. And you don't have to take those other amounts. If you keep them in the system, you don't take them in cash, then no tax is payable on them either. When you get to retirement, your savings pot can be taken in cash, but this time on retirement, it's taxed in terms of the retirement tax scales. The portion of your vested annuity pot, which is a maximum of 1/3, can be taken in cash, taxed in terms of your retirement tax scale. And for those few people that have a vested lump sum pot, they can take all of their vested lump sum pot in cash, but it's taxed in terms of the retirement tax scale. The rest of your money you use to buy an annuity or a pension. There is no tax paid when that purchase happened. So I retired at 63. I've got 2 million rand to buy a pension. The 2 million rand is not taxed. I buy a pension, let's say it's 20,000 rand a month. That 20,000 rand a month is now taxed as income. So the pension is taxed as income, but the purchase doesn't incur tax. So they've made it slightly more complicated, but if you look at each part, you can see the tax that applies to each part. Now we look at the important part of, we need to make sure it's you asking for your money as a savings pot withdrawal. We need to verify your data. What do we verify against? Every month when you pay your contributions, so the employer takes your member contributions off your salary and pays them to the fund, the 7.5%. The employer pays 18%. That is also paid to the fund each month. But the fund needs to know who the money is for. So every month, your employer provides a schedule or a list of everybody who works at, let's pick eJoburg Water, and gives us their details of their name, their ID number, their date of birth, and those contributions. So your contributions can be allocated to your fund credit, to your benefit. Those details include your surname and initials, and those we've got for everybody. Your date of birth, which is there for everybody. Your ID numbers, which are correct for just about everybody. There were one or two that were wrong, but the administrator is trying to get those corrected. Your tax number, they were missing for about 175 people, but the administrator is trying to get that information from the employers, because remember, if we can't have a tax number, you can't pay tax, which means you can't get a benefit. But the difficult one is cell phone numbers. We have 33,000 people on the fund, but only cell phone numbers for 22,000 people. 11,000 are not with the fund. And that's understandable because we all get a lot of spam messages, people trying to sell us things that we don't want. So we didn't want our numbers with the fund. But if the fund doesn't have your cell phone number, you cannot make a savings pot withdrawal because we can't verify that it's you. So you need to provide that information. The fund will not use it for anything else. It will not give it to anybody else. It will only use it for your benefit. As I said, it's really important that we can verify it's you because we don't want someone else coming along and trying to take your money. And remember, this is a lot of money because it could be up to 30,000 Rand or more in future years. So we need to be very careful that we are paying it to you and not to somebody else. That data you provide when you ask for a request must match what the fund is holding. Remember, if we don't have an income tax number, we can't apply for tax. If you can't apply for tax, you can't get a payment. And remember that it will be paid into your salary bank account to prevent anybody else from trying to get your money. So even if they try, we will still pay that to you. You may be a bit surprised when there's money in your salary bank account, but at least it's in your account and we can then sort out the issue. So if you believe your data is either missing or wrong, you need to get it corrected if you want to take a savings pot withdrawal. It needs to be corrected with your employer. It doesn't help for you to come to the fund and say, my name's Howard, here's my cell phone number, because the fund doesn't know if that's somebody else pretending to be me. You need to work through your employer who will update their payroll systems, administration systems, and then provide that data to the fund. If you're not sure if your data is correct, you can either do, as we said, that WhatsApp check to see if the fund verifies you, or you can go to your HR department and say, please tell me or help me check that my data with you is correct. Things like your date of birth, ID number, tax number, cell phone number. You may already have been asked for this information by the employer, and that's just a separate exercise that's happening where the employers are trying to verify all personnel data for the employees that is not related to two-pot. So please don't rely on that happening in time, because some of those exercises will only finish early in 2025, and we may only get that data then. If your data is incorrect, please update it with your employer, and then the fund will get that information in the next month. The fund also sent out benefit statements in early August of your benefits in the fund on 30 June 2024, that included all your data fields. So it would show your ID number, your tax number, your date of birth, and your cell phone number. If those weren't on your benefit statement, it means the fund didn't have your data, and you need to then update it through the employer. And again, if it is wrong, it needs to be corrected. If you haven't received your benefit statement, please go to your HR department and ask them to give it to you, because they were sent out, as I said, in early August. We've also sent out a newsletter highlighting the importance of the data verification, and it's also on the fund website. Let's look at savings pot payments. So if you ask for a savings pot payment, the fund will then ask for a tax directive from SARS, and that will be deducted from the amount. SARS will treat it as income, so it's taxed as though it's an extra salary in that year, and that tax rate will be somewhere between 0 for people with very low tax rates and 45%, which is the maximum tax rate. Because it's an estimate, the exact amount of correct tax will probably not be taken off, and you may have to pay in a small amount at the end of the year, or you may get a small amount back from SARS. The withdrawal administration fee of 250 Rand will be deducted from the payment, and then you will receive the balance. How long will it take? This is not like an ATM payment where you put your card in and the money comes out. There are various processes that have to be followed. The administrator has committed that it shouldn't take longer than 15 days, but they will obviously do it quicker if possible. And it's probably taking somewhere between 3 and 5 days at the moment. It could take longer if there are a lot of people coming forward at the same time. So please be aware it's not going to happen immediately, and you will get that SMS notification once it's completed so that you know that the money's been put in your account. And then it'll be paid into your salary bank account, and you'll get that SMS notification. Let's look at an example. Our member had a fund credit of 500,000 on the 31st of August. So her initial savings pot was 10%, but a maximum of 30,000. So her savings pot was 30,000 Rand. She asked for all of it, and her marginal tax rate, because of her salary, and it'll differ for everyone, is, let's say, 25%. She's requested 30,000 Rand. The 250 Rand is deducted, leaving her 29,750. The tax is calculated on that 29,750 at 25% in this example will be tax of 7,437 and 50 cents. So she would receive 22,312 Rand and 50 cents. And obviously that will depend on how much money you've got and how much you ask for and what your tax rate will be. But it just gives a feel for the fact that you ask for a certain amount, you will get less because of the tax and the administration fee. Okay, we're going to switch to Ntabise. Will this always go right? And the answer is no. Your withdrawal might be refused if the verification process fails, because we can't match your member details, your cell phone number, your ID number, and can't prove that it's you coming forward and asking for the benefit. In that case, you will need to find out why it doesn't verify, either through your employer or through the call center, get it corrected, and then you can reprocess the request. If your tax number is incorrect or outstanding, then again, we can't get a tax directive until that is corrected with your employer and they've got your correct tax number. If your tax affairs are not up to date, so you haven't sorted out your tax for previous years, or if you owe SARS money, then they may say they won't issue directive, or if you owe them money, they can take that off your savings pot withdrawal. So in that previous example, we saw the lady come up with 22,000 Rand odd. If she owed them 20,000 Rand to SARS for previous year, SARS will instruct the fund pay that 20,000 Rand as well, and our member will only get 2,000 Rand cash. So she asked for 30,000. The tax of 7,000 was taken off it. The fee of 250 Rand was taken off it. And the tax of 20,000 Rand that she owed SARS previously is also taken off, and she will only get that 2,000 Rand difference. And that, unfortunately, is the law, because SARS have the right to do that. You can't come back and say, whoa, stop that, I don't want it to happen, because the moment the processing has started, we are forced to pay that to SARS. So please be aware, if your tax is not up to date, or if you owe money to SARS, that could affect the amount you receive from a savings pot withdrawal. If the amount you've got in your savings pot is less than 2,000 Rand, or if you ask for less than 2,000 Rand, then it will be refused, because the law says you have to take a minimum of 2,000 Rand. If you've already taken a withdrawal in that tax year and you come back for a second withdrawal, it will be refused, because you can only take one payment in a tax year. That's where it could get refused. It might also be delayed in other circumstances. And the first is if the fund is aware that you are getting divorced, or there is a maintenance order for money due from your benefits, e.g. for kids that need to be supported, then the administrator of the fund are required to stop the process and check that there will be enough money to pay that divorce order and maintenance order before you can get a savings pot withdrawal. So the process might be stopped or it might be delayed depending on what goes forward, but the fund will then communicate with you around that. In practice, if you're getting divorced, your wife has to actually sign, or husband, depending if you're male or female, your spouse has to sign off that they're happy for you to get a savings pot withdrawal before you can take one. So again, please be aware that if you're in the process of getting divorced or there is a maintenance order, it does have implications on a savings pot withdrawal. And then again, if there are a large number of withdrawals, it can put pressure on the processing system, including SARS, because they've got to do a lot of tax directives, and that might create a delay, but it will still happen. It might just take slightly longer. Communication. There is the funders prepared a 2-page summary document on Two-Pot. It's being distributed in a number of ways. It was sent out with the newsletters. If you attended one of the member presentations, and the funded over 100 member presentations for people to attend, it's on the member website. It was sent out with the benefit statements. And if you want it, you can also get it from your HR department or in fact from the call center at the fund as well. The 30 June 2024 benefit statements were sent out, so people saw those hopefully, and that 2-page document was included with it. It was sent out with the fund newsletter. It's available on the fund website if you'd like to get a copy of it. And it was put out the member webinars as well. The following have been loaded onto the website. So this presentation that you're seeing now is on the website if you want to look again at some of the slides. A copy of one of the previous webinars is already on the website. It's a YouTube video, so you can just click onto it either on a laptop or on your cell phone and view it. And then this webinar with the sign language interpreters will also be loaded onto the website later today if you'd like to review it or view it again. If you know of people that haven't managed to go to one of the webinars or the presentations but would like this information, please refer them to the website and then they can view these webinars if they want to, the recorded versions. Then finally, this is just a slide that sets out a summary of Two-Pot. So you'll see on the left-hand column, we've got the 4 different pots. We show what money can go into each pot. So for instance, your savings pot will go in your seeding capital and 1/3 of your future contributions. Your retirement pot is 2/3 of your future contributions. Your vested pot is all your money up to the 31st of August, less your seeding capital. The middle column shows what can be taken without leaving employment, which is only your savings pot. The next column shows what happens on resignation. Your vested pots can be taken in cash. Your savings pot can be taken in cash, but your retirement pot has to be preserved to retirement. You cannot take it in cash. And then the last column sets out what happens on retirement, that your vested pot, lump sum pot, can be taken in cash. Your vested annuity pot is a maximum 1/3 in cash, 2/3 to buy a pension. Your savings pot can be taken in cash, and your full retirement pot must be used to purchase a pension. So it's quite a useful summary of the whole Two-Pot system. That's the end of the formal presentation. It is fairly complicated and it's a big change from where we are now. But if you just think of each pot separately and what you can do, it's a lot easier to understand.